Hello, my name is Michael Glass from eMediaTradingCoach.com, where we focus on identifying high probability trading setups. And before we begin our video on market profile, we want to talk about our disclosures. Any symbols you see today should not be inferred as a trading recommendation. Any form of investing that you choose, stocks, forex, futures, options, all have a level of risk associated with them. You can lose your money. And any system strategy we show today are hypothetical. Future results are not guaranteed. Any investment decision you make solely on responsibility, trade at your own risk. So as I just said, we're here today to talk about market profiling. And I thought this quote was pretty good. It says, one very important aspect of motivation is a willingness to stop and to look at things that no one else has bothered to look at. This simple process of focusing on things that are normally taken for granted is a powerful source of creativity. And the reason I thought that's important is that market profile is about looking at where price action is occurring, and so often people focus so much on setups and trading setups and filters that they don't look at, well, where is price telling us there's going to be a setup? Where are most of the traders? Where's most of the action happening? At what price levels? Where can we find value? Where can we see that the market is now entering a expansion? And so we have to sometimes take the time and get out of the snapshot and look at the telescope, look at the large view of the market and focus on what it's telling us versus just focusing on all our different trading setups. So how can we use market profile? Well, market profile helps us answer some of the 4 W's. What is the market doing? Why is the market doing it? When is the market going to go? And where will that market go once it begins to move? Market profile can help us answer those 4 questions. How? Well, let's talk about some of the basics. First of all, market profile is a tool for organizing time and price data. It graphically represents how volume builds at various prices over time. Again, where is the action happening? Where did the most volume happen the day before? Where did light volume happen? And then that's how we can define a value area. The value area equals the price range, the key price levels where 70% of the prior day's price action occurred. The point of control is that exact price level that had the most volume traded on the prior day. And what we want to look for is when the market is in balance and out of balance. Market balance is when we see most of the trades occurring within a relatively narrow range of price within the value area. This is the market known as when the market is in balance. So, one of the first things to understand about market profile is that when the market is trading outside of value and comes inside of value and is able to maintain that value for 30 minutes, is more than likely to go from the value area low to the value area high and vice versa. So it's kind of hard, but again, when you're thinking about this and you think about again, the ability to focus on things that other people are looking at. When the market is down here at the low, when the market is down here, how many people are holding to go all the way up here? But that's where you make your money. That's where the professional traders are making their money. They're buying at wholesale down here and selling it at retail up here or even up here. Whereas the newbies, they're buying at retail and selling at wholesale prices. So often, again, we focus on trading setups and we get a couple ticks, we get a point, and we're so happy. But the money, the big money, where you're going to change your P&L at the end of the day, your profit loss at the end of the day, is the ability to recognize that I'm in value. I'm trading in value. I'm staying within there for a couple bars and then holding on. Sure, it's a tough ride, but when you hold on, now you're going from making 1 point, $50 to 60 to 70, 10 points, and $500 on one contract. How is that going to change your profit loss at the end of the day? How is that going to change your ability to withstand some stop outs if you're holding on for the big picture and not just these smaller targets? Now keep in mind, don't hold on to prove a point. There always comes a time where you have to cut your losses and preserve your capital. It's 80%. So that means 20% of the time it doesn't work. So if you're in and you're getting, in this example here, we can see that there is some resistance here. So it makes sense to get out here at 70 instead of trying to hold for 73, 75. We're going to pull up some charts and look at it more. But the basic 80% market profile rule simply says, as we come back into value and hold it for 30 minutes, there's an 80% chance that we're going to go from value area low to value area high and vice versa. But that's market while the market is in balance. Now, there's also understanding when the market is out of balance, and that's when the market opens above or below value area. So if the market is able to open above value and hold that price level, then that is a strong bullish signal, and be prepared for the market to trend higher. On the reverse side, if the market opens below the value area and is able to hold it there for 30 minutes or so, and volume keeps us outside of that value area, that is a strong bearish signal, and we should begin to trend lower. So let's go ahead and pull up some charts and look at some examples. Okay, so we've pulled up our charts. Right now I'm using Thinkorswim and their newly released market profile. They're called monkey bars. And it doesn't really matter what platform you're using. The point of control is going to be the same. Remember, point of control is the price level which acquired the most volume the day before. So right here in the middle, we can see here's our point of control, the purple point of control, point of control. The yellow lines are value area low, value area high, value area low, and high, and so forth. And now there are different ways to calculate that. I know those of us who watch Shadow Trader know his are a little bit different, but the concept is still going to be the same. So let's take a look. Remember, the main thing we're really focusing in on our video today is to give you an introduction to market profile and to talk about how to trade the volume and the price action, whether it's within the value area or if it's above or below the value area. So we can look at this day and we can get all the way over here to 9:30, and we can see that we are outside of value area. But we also can see that we move right back into it. So this is not a situation where the value area low held. We did not hold outside. Once the market opened, we did not hold out below value area low for 2 periods. So we're not necessarily going to be bearish for today. However, once we come in, we got 1 and we got 2. Now, if you would have just went long right here, certainly, yes, you would have taken a lot of heat. But the concept is true. Once you hold within value area for 2 bars, it is an 80% probability that you're going to move up to value area high, which we did here. Let's go over to this one. Let's find 9:30. This is Thursday. Find 9:30 right here. Once again, we open up below value area low, but did we hold it? We certainly did not. Matter of fact, we came in, and depending on how you do it, we got 1 bar, 2 bar, and then we did eventually make it to value area high. Let's go back some more. Let's go back to Wednesday. Wednesday, we opened, first let's get to 9:30. Here's 9:30. So Wednesday, we sort of opened above, actually opened within value area. And remember, value area simply means choppiness. This is where 70% of the volume happened the prior day. This is where the hardest trading is going to be. Doesn't mean don't trade, but it's important for you to understand that it is hard trading. And so we opened within value, we went up higher. Did we hold above value for 2 bars? No, we did not. So that's why, even though we had this nice move, but the reason we didn't see the trending is because we did not stay in, we did not find value, we did not find bids as we moved outside of value area. As a matter of fact, we came right back in. Not only did we come right back in, but we came all the way back in. And so, And we held it for our 2. So those of us looking at this one here, you might have considered to take that short. And heck, look, we came all the way back. What this day shows you is what? Value area is choppy, and we went down and up and down and up. Down and up, down and up. Let's go back to Tuesday. Find 930. We find 930 here. We opened within value. And we held it for 2, and we didn't make it to the top. And then we actually held up here for a top, so that there was some, we did catch a bid here going into the close. Let's check one more day. This is Monday. We'll find 930. Here's 930 right here. We did not find a value below the value area low. We didn't continue to hold down here, so we didn't see a trending down day. Now, of course, anybody knows that for the past week, for the past 2 months, we've been moving up. So that's another reason for you to go long. But here we do catch in here for 2, and we did make our way up to value area high. So let's go ahead and review what we've studied so far. Again, we've been looking at market profile, and the first thing we have to understand is that the market typically is going to be in a narrow range, and this is when the market is in balance. Remember, we have the point of control, which is the price value, the price level, which had the most action, the most volume on the prior day. And we have our value area high and our value area low. And that equals 70% of the price level, where the price action happened on the previous day. 70% of that volume happened between the value area high and low. And we also must understand that the market consolidates 80% of the time. So we are going to be in balance. We're going to be in the value area the majority of the time. The market trends up or down only 20% of the time. So we have to keep that in mind. And that's why it's important to understand the 80% rules, which happens to do and deal with when the market opens above value area high or below value area low. And when we do that, and we come and price action moves its way back into value area and holds it for 2 time periods, specifically 15-minute charts. Some people believe 30-minute charts, whatever floats your boat there. But when value is price is within value after being outside of value and holds it for 2 candles, there is an 80% probability that we're going to now cycle from that value area extreme, low or high, to the other one. So since we know that the market consolidates 80% of the time, it's in balance 80% of the time, that is a trade that you have to be aware of. Likewise, when price is outside of value and is able to withstand and hold that, sustain that price level for 2 periods, we now have a strong move, and the market should trend in that direction because it was able to find a bid. It was able to, as far as uptrending or as we're going down on the ask side. So because we're able to hold that, we can find that as a strong move, and we should be looking for trending trading setups. So you guys know we're on Facebook, YouTube, and Twitter. E-Mini Coach on Twitter, E-Mini Trading Coach on Facebook and YouTube. And we have a great 5-part video course on developing high probability trading setups and how to walk you through developing your own. However, we hope that is an introduction for you for our video curriculum, where we talk about the building blocks of trading, technical analysis, chart patterns, psychology trading, trade management. And then we actually get into the trading plan components, where we talk about direction and triggers and management and the trading setups. And you'll notice that, for $250, we're not trying to charge you $3,000, $2,000, $1,500. We don't believe that this is what's going to change your trading. There's all the systems out there, and you guys buy them. We all have bought them. But what's going to change your trading at the end of the day, your results, your P&L at the end of the day, is having a trading mindset. And so that's why we're willing to sell our setups, our system at a cheap level, because we want you to focus on what's going to change your life is having the trader's mindset and developing the psychological capital to take your trades. And we have a great mentoring program to help you do just that. We got a great futures broker, intraday mini margin, lowest $300, 20 free trades as you sign up through us. And we are working on a Forex blog to give you the same great information with an emphasis on Forex. But guys, you know, it doesn't make a difference, as we just said, about the system, about the indicator, the trading room, whatever. If you don't pull the trigger at the end of the day, you've got to have the trader's mindset, and that's what we at E-Mini Trading Coach are here to help you do. Thanks, guys, and I'll see you next time.